Hi, I'm Brand Lokits, and this is Banking on Intelligence, a thought leadership series brought to you by nCino. And today I'm joined with David Pommerehn with the Consumer Bankers Association. David, thanks for being with us.
Oh, it's a pleasure to be here, Brendan. Thanks for having me.
Absolutely. To get us started today, give us a little information on your background and maybe what you do at CBA.
Okay. Well, CBA is an association. We operate on a federal level in D.C., primarily looking for policy issues related to banks that are supervised by the CFPB, the Consumer Financial Protection Bureau. So our bank membership tends to run from the $10 billion spot up until the trillionaires up in, the very high end. I'm general counsel. I'm also head of regulatory affairs. So my job at CBA is to make sure that we're interfacing with all of the regulatory agencies on the federal level, and making sure that we are advocating for the best policy positions in the consumer banking space, which also includes a little bit of small business, but consumer banking space on that level. And we do a lot of work on Capitol Hill, working with the committees of jurisdiction, Senate Banking Committee, House Financial Services Committee, and a few others, and making sure that policy coming off of Capitol Hill is also in line with our membership.
Talk to me a little bit about maybe some of the challenges that you're seeing across the industry today, maybe some of the headwinds.
It's interesting. I mean, we have our annual conference every year, and we tend to poll the membership on what they see as going to be a challenge going forward. And lately, it's very focused on the regulatory compliance world, and this kind of pendulum swing that we see from administration to administration. Almost to the point where it's a night and day regulatory environment. And right now we're kind of in one of those transitions. Not kind of, we are in one of those transitions, where the regulatory agencies in DC were very aggressive under the Biden administration, to a point where that was probably more politically, ideologically driven than it should have been. I mean, banking regulation should really be focused on market failures and actual harm, not on presumed harm and presumed market failures or politically ideological position that, it's just advancing a political platform. And so that extreme swing from the Biden administration now back to the Trump administration, we're seeing, it's the widest I've seen yet, where you have the Trump administration essentially almost doing away with some of the agencies, trying to rescind or modify a lot of the rules that came out of the existing, the pre-existing administration. And while we look forward to a deregulatory space, a deregulated space, we're always for a smart regulation. But at the same time, it is very difficult to operate in this space because you don't know the rules of the road right now. And my biggest concern, and I'm sure it's a concern of many banks, is that when we have eventually another pendulum swing, that will create an equal and opposite reaction from another administration, and then we'll just continue back and forth. So the bottom line, to get to my point here, is really that we need to level set, right? We need good regulators. We need the regulators to operate in a consistent manner with consistent regulation so that we can move the ball forward for consumers and small businesses.
Right. And I guess within that pendulum swing of regulation, administration to administration, from your perspective, how can financial institutions stay with those changes? Any thoughts on how banking can be made better from that regulatory vantage point?
When it comes to things like fair lending analysis, the new administration has essentially done away with what is called disparate impact analysis. And our member institutions say, okay, we're not going to be supervised for this, but what happens in 3 or 4 years when we are supervised for this and we weren't doing it now? And so they're cutting this really kind of like almost this, just between knowing what to do and not knowing what to do, right? It's this purgatory of regulation, right? And so, it's a difficult, road to navigate. And our banks are sophisticated and they have been through this before, maybe not to such a great extent, but they're going to do their best, I believe, to do what they think is right and do what they think is going to be supervised and examined for in 5 years from now when there's a possible different administration, and making sure that they're lending in ways or developing products and systems in ways that are beneficial to consumers.
With the, I think you termed it regulatory purgatory. I think that's a good frame of reference. And you were talking about the future and potential changes down the road. If you were to pull out your crystal ball and look at 5 years, perhaps 10 years down the line, any thoughts on where you think regulation might be headed in a big picture sense, long-term sense?
Well, I mean, I can tell you where I hope it's going. I would like to see it, again, level set, right? And that the rules be written in a way that are accomplishing what they're intended to do, either from a statutory point of view or from an initial fair lending analysis, things like that in nature. But in 4 or 5 years from now, I think it's very possible that we have a new administration. And again, we might be dealing with this kind of wide swing. And so, this is nothing new. I mean, we've always had swing between, political parties and administrations. But again, CFPB being kind of a fledgling agency, it's only, 15 years old or so at this point. It's not as deep-rooted and established as, let's say, the Federal Reserve Board or the FDIC or the OCC. And it tends to act more on the political spectrum than those other agencies do. So in 5 more years, I'm hoping that the CFPB becomes a little more grown up, and a little more stable and consistent and durable. We want to see the CFPB go into the future. I think there are parties out there that would like to abolish the agency. I think that we do need it, especially in the non-bank space where there's not a whole lot of supervision of non-bank financial companies. But we need it to be credible. We need it to be durable, and so at CBA, that's our mission for the next 5 years in the banking space.
Perfect. Well, thank you so much for your time, David.
Yeah,
Definitely appreciate it.
Yeah, thank you, sir.
Look forward to talking with you again.
Yeah, thank you. Yeah.
Again, I'm Brandon, and thank you for your time. This has been Banking on Intelligence.